Basically, if you look at these filings, I think the most notable one is Litecoin. Now, Litecoin is Bitcoin basically, more or less. So it's viewed as a commodity. So this was filed during the Gensler SEC, and anything filed in the Gensler SEC that they saw was a security got the phone call from the staff saying withdraw this. Litecoin didn't get that call.
So
Litecoin
you need to update.
90%, Solana XRP 70, 65%. Dogecoin is now 80 because that did get acknowledged. Oh, I'm sorry. XRP is also 70. So XRP is acknowledged 70. You get an extra 5 if you get acknowledged. Doge goes up to 80. So 90, 70, 70, 80.
2024 marked a permanent shift in the cryptocurrency space, especially for Bitcoin, the largest crypto by market cap, which received the green light for several spot exchange-traded funds in the United States. That green light, coupled with underlying fundamentals such as the periodic halving event, saw Bitcoin's price from just above $42,000 in January 2024 to an all-time high of $109,000 in January 2025. Through the ETFs, several pension funds, hedge funds, giant financial corporations, and other institutional investors have been introduced to the crypto space over the past year, and it does not seem to be slowing down. According to Bloomberg ETF analysts Eric Balchunas and James Seifert, a few other cryptocurrencies could receive similar regulatory green lights for spot ETFs in 2025. James first shared the news in a social media post, which reads, Eric Balchunas and I took a look at the filings for spot crypto ETFs. We are putting out relatively high odds of approval across the board, mainly focused on Litecoin, Solana, XRP, and Dogecoin for now. Here's the table with the odds and some other details. The table shows a 90% chance of approval for Litecoin, along with the information that the SEC likely views Litecoin as a commodity, which bodes well for a spot ETF approval. Solana has a 70% chance, while XRP has a 65% chance, according to the table. However, neither is considered a commodity by the SEC. The table also shows a 75% approval rate for Dogecoin, which is also likely considered a commodity by the SEC. In a follow-up post, James added that the filings for XRP and Dogecoin would soon be acknowledged, and the SEC's crypto task force led by SEC Commissioner Hester Peirce would untangle some of the security versus commodity implications from lawsuits by the end of 2025. In a recent interview with Milk Road, Eric gives an update on these filings, the chances of approval, and how that will impact the prices of these cryptocurrencies. As we bring you clips from the interview, please watch, share, and like this video, subscribe to the channel, and turn on post notifications for more videos. Thanks, and enjoy the video.
XRP has been acknowledged. So this thing is, we basically have to update it almost every day. But basically, if you look at these filings, I think the most notable one is Litecoin. Now, Litecoin is Bitcoin basically, more or less. So it's viewed as a commodity. So this was filed during the Gensler SEC, and anything filed in the Gensler SEC that they saw was a security got the phone call from the staff saying withdraw this. Litecoin didn't get that call. So Litecoin has a head start because it was started in the Gensler era, and it should be no problem with this era because they're more liberal now. So that's good to go. We think that's got a 90% chance to go and be the next one launched. Now, they have till October to make a final decision. Will they use all that time? I don't know. Maybe Hester Peirce and Atkins will make a point of just getting it out. Why wait? I don't know. But October would be the final date. Then you've got these Solana ones, which just got acknowledged. The fact that the Solana and XRP got acknowledged is maybe the biggest news of all this, because in the past, again, they were like, get the hell out of here. They tried. They always try. Every 6 months, they're like, let's just test Gensler. And they all got withdrawn, including during the lame duck session after Trump won and before Gensler, left the building and drove out of there. They got rejected. Withdrawn. So the fact that they lasted long enough to be acknowledged by the SEC, opened up for comment, it's not like that's weird. That's normal. But normal is outstanding or positive when it comes to these security type cryptos. And what it does point to, and this is something Scott Johansson said, although You can't. Well, never quote me and James on this because we don't want to go that far. But he thought this was a direct sign that they would have to rescind these lawsuits or tamp out all that down because you can't technically approve it if you see it as a security.
Yeah.
So it's ipso facto. You
Yeah.
can. I'm not going to say that's going to happen. That's a little beyond my depths, but I will say, I mean, that would be the way that would happen. And then Dogecoin wasn't named, but either way, this one is filing the others, and we just think basically if you're going to be positive about Solana and XRP not being securities, you're good with Dogecoin. And then you've got Cardano and has a 19B4 has not been acknowledged yet, probably will. And then we've got HBAR, Polkadot, which have S1s, but not 19B4s. Now, the reason the 19B4 matters is you have to get that approved. So if you only file the S1, it's sort of like not a complete attempt at a filing yet. It's like a half attempt. So those aren't even really on the register. But I think there's also this other situation. I don't want to wonk out too much, but Rex shares filed for XRP Solana in a 40 Act vehicle, doing this thing with a Cayman Island subsidiary to get around some rules. They've done this a couple times in ETFs with commodity type ETFs. And to have all you do is invest in the Cayman Island subsidiary, then that invests in it. So it's kind of like a little bit of a maneuver, I'll call it. If that goes through, that would go through in like March or April. And that could front run all these. Is that a true spot ETF? Not really. It's got that an asterisk next to it. And we found that investors tend to love the real deal. They want to buy the ETF that which in turn goes and buys the underlying and stores it. That we call like a true spot ETF like GLD or IBIT. So this list here is all ETFs trying to be GLT and IBIT like. The Rex shares it's not like BITO, which was Bitcoin futures, but it's somewhere in the middle. And I think that'll be interesting if that does have like a 3-month lead or head start on the rest. Does that matter? I don't know. Anyway, this is all part of this sort of jockeying that we see. I don't know if you're probably not old enough to remember the movie Cannonball Run with Burt Reynolds. No. Yeah, no. It's a really fun 80s comedy. And it's basically all these people who have a illegal race. Whoever can get from New York to Los Angeles the fastest wins $1 million. And one team dresses up as priests. It's a Sammy Davis Jr. and Dean Martin. Jackie Chan is in it as this sort of Japanese spy hunter car that can fly and stuff. Two ladies kind of like dress, liberally. And this is also when people get pulled over, they can get out of it. And then Burt Reynolds' team is in a hospital, like an ambulance. So they're pretending to be doctors. So all these people are like just basically doing whatever they can to evade law enforcement to get to LA the fastest. This is what this reminds me of. It all had the Bitcoin race had the same thing. There's a cannonball run kind of element, which is just trying this, trying that. And the reason is because if you get out to market first and you start to get the lion's share of the assets, it's almost impossible to catch that person, especially once they get liquidity. That's why people are so interested to get out first, even with these coins that they're like, I don't even know if there's interest, but just in case there is, I want to be the first out. So that's why there was an explosion of filings the week after Gensler left the building and drove away. Now we got, I think, like 55-ish total filings. And that was like 12 before Trump won, something like that.
During the interview, Eric also shares his opinion on the possibility of a U.S. strategic Bitcoin reserve happening in 2025. The discussion was recently revived on X when an individual with the account name Zero Hedge suggested that Elon Musk take a look inside Fort Knox to ensure the 4,580 tons of U.S. gold were still untouched, adding that the gold had not been fully audited since 1974. Musk surprisingly asked if the gold didn't get audited yearly, and Zero Hedge replied with, "It should be, but it isn't." Another X-user with the username Walker America quoted the exchange with a scenario of how he believes a Fort Knox audit would play out. The tweet reads, "Here's what's going to happen. Elon pushes Trump to audit Fort Knox. Audit reveals there is less than 500 tons of gold. Trump realizes China and Russia have way more gold than the US, but very little Bitcoin. Trump issues EO for Strategic Bitcoin Reserve, citing national security. The money printer goes brrr, and the US buys as much Bitcoin as the market will sell. The price of gold collapses in Bitcoin terms. China and Russia realize Trump got the jump on them and start trying to acquire Bitcoin. The price of gold collapses further. Peter Schiff is admitted to a mental hospital. While Eric is skeptical that things can progress as quickly as this, he says more surprising things have happened in recent years. Here are more clips from the discussion.
So first of all, I just was fascinated by this because of the specificity. I mean, there's so many specific things in this. I come from the traditional sell side, space, and like no one talks like this, and it's just interesting to me. Even a little humor at the end, and I also find it very crypto that it's not here's what could happen. He's like, here's what's going to happen, and he lays out like it's like this thing that might have like a 1-2% chance. He's like so confident, so specific. And I just thought it was funny. So I just asked people what percent chance they thought it could happen. And mostly a lot of people from my TradFi followers were like 0, ridiculous. But some of the crypto people thought it was possible. I think some thought 1 through 4 more likely. A lot of people thought 9 was going to happen regardless.
That's Peter Schiff going to the mental hospital for everybody
it was one
else.
of those chances for a little fun on a Sunday or whatever. There's been multiple things that have happened in the past that have turned out to be true that sounded pretty absurd at the time. And so I really, when I see something like this where there's no gold in Fort Knox, in 2014, 10 years ago, I'd be like, that just sounds like a crackpot theory. I move on with my life. But so many things have happened that I'm like, who knows? I mean, so I have a little more open-mindedness towards stuff that might sound conspiracy-ish. And so I was only half kidding. I thought, man, there's a half serious chance there isn't the gold there. I know that all the crypto people surrounding Trump might say, well, screw it, let's just go with Bitcoin. So there is a sort of like logic to it, some of that being possible. But on the flip side, some people were like, well, if there's no gold there, like they might not say that publicly either. But then again, the way Elon is so transparent, I think they'd have to. I don't know. The whole thing's fascinating. I think if you polled people and asked them, is the gold actually there? I think, I'd probably guess it'd be around 50-50. Now, does that lead to all those other things? I don't know. But certainly Bitcoin is, I think, seen as digital gold. And there's something about what this person's talking about that is somewhat smart. But I think you could do it without the gold not being there. I think that's the part of that sounds a little like tinfoil hattish. But again, like I know that our social security funds are not really there. I mean, they're supposed to, they've already took that money and just put IOUs in there. So I don't know.
How do you see the future? Are people going to buy more on I don't want to get into the self-custody debate, but are people going to buy more on the ETF side, or are people going to buy more of their crypto on chain?
Well, there was some great numbers that if you look at the Bitcoin ETFs in the past year, I think they were 2/3 of all the buyers. And I think Michael Saylor was like 1/3. Everyone else was a net seller combined. Now, of course, there's some buyers in those net sellers, but it just shows you how powerful the ETFs are in this first year. I premised that they kind of made the price go from maybe 30K to 70. I think Trump optimism helped to go above 70 to like 100. But I think ETFs should be given credit for a good chunk of that move up. And the reason, and I've been to a couple big Bitcoin conferences like Plan B in both Lugano and El Salvador. So I've gone right into the sort of lion's den of crypto as the TradFi suit guy, and basically said, listen, you have to respect the ETF a little more. This thing is very disrupting. It's not something Wall Street loves. ETFs make no money for Wall Street. They'd rather sell mutual funds and high level hedge funds and all annuities. ETFs are a lean and mean, and That's why they're so popular. They are almost free. You get, the Bitcoin ETFs, 20 basis points. I mean, that's very low fee, and they are very liquid. So the liquidity means that when you trade them, there's just really no trading costs. And then there's no commissions on your brokerage account. Like, there's free trading of ETFs on the major brokerages. So you're looking at free trading, free exposure almost. And you've got this sort of trusted brands of BlackRock and Fidelity to boot in a very regulated structure. So you have it's a benefit rich vehicle. And some of the understated benefits are just convenience. People love things that are convenient. And also this idea of like, well, peace of mind. Like, if you have keys, there's been some people who got robbed recently. There's also been people who lost their keys in the fire in LA, I heard. Obviously, if you outsource it to BlackRock, you maybe go against the ethos of Bitcoin, but you certainly make sure you have access to that Bitcoin later, because it's held one-to-one with Coinbase. Every ETF is held one-to-one. They're all physically backed. It would be illegal not to do that. So there's a real security in all that. And now you can just walk around like not worrying about it. Now, on the flip side, if you think like society is going to like crumble and like having actual Bitcoin that you can transfer yourself is going to be valuable in like a Mad Max afterworld, and you think the government might confiscate Bitcoin like it did gold, if you're at that level, I would not use the ETF. I think the peace of mind would come from having your own wallet, to be honest with you. So I just think it depends on how far on that Mad Max road you are. And I think the vast majority of people do not think society is going to collapse and it's going to be like a Mad Max afterworld. And so they're like, look, it's a cool invention. I get why it can store value. A lot of smart people are buying it, and I don't want to kick myself later. I'm very happy to outsource it. So they are happy to let BlackRock handle all that. And personally, the reason gold ETF is so popular is the friction of going to buy gold bars, getting a safe, putting them in your house. There's an equal amount of digital friction for a normal person to go do the whole wallet thing. So ETFs, I mean, think about it. You can take an ETF. There's an ETF that just holds the Magnificent Seven stocks. That's 7 stocks, and it's got $1 billion. I mean, that's not that much friction. You could go buy the 7 stocks pretty quickly. But so if you eliminate just a little friction, you'll see some buyers. You eliminate a lot of friction, you're in business, and that's what the Bitcoin ETFs have done.
The ETF versus on-chain Bitcoin debate was officially revived over the weekend when anonymous Bitcoin analyst Plan B announced he had transferred all his Bitcoin to ETFs. Disclosure: I have transferred my Bitcoin to ETFs, Plan B announced in a post on X on Saturday. Yes, I know, not your keys, not your coins, but it is just easier for me to manage Bitcoin the same way as equities and bonds. Also, not having to hassle with keys gives me peace of mind. I guess I am not a maxi anymore. Though Plan B's decision has been broadly criticized by Bitcoiners, he has defended the decision and hasn't shown any signs of backing off. Do you think this will become a norm among Bitcoiners, even formerly confessed maximalists like Plan B? How will that impact the price and adoption of Bitcoin and other cryptocurrencies in the long term? Please drop your replies and thoughts on Eric's interview in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.